Hi, my name is Rory King, and I'm a second year finance student at Georgia Tech from Decatur, Georgia. My stocks are JB Hunt, Qualcomm, and SAP. Outside of this research, I am involved as the treasurer of Finance Society, and I'm a member of GT Boxing, and I have passed the CFA Level 1 exam. I'm also one of the recently inducted CFT scholars. Alright, let's talk about SAP. SAP SC, established in 1972 and headquartered in Waldorf, Germany, is a leading multinational software corporation specializing in enterprise applications and business AI. The company offers a comprehensive suite of products, including SAP S/4HANA for finance and supply chain management, SAP SuccessFactors for human resources, and a variety of cloud-based enterprise solutions. With operations in over 180 countries and more than 100,000 employees, SAP serves organizations ranging from small businesses to large multinational corporations. In recent years, SAP has increasingly focused on cloud computing and artificial intelligence to improve enterprise productivity and decision making. SAP's largest segments are cloud computing and software, with the majority of cloud revenue coming from enterprise resource planning solutions that integrate a company's core operations into a centralized digital system. Now, let's talk about the earnings report for Q4 and fiscal year 2025. Revenues for Q4 2025 were about $9.68 billion, a 3% increase from from Q4 2024. IFRS operating income was roughly $2.55 billion, which is a 27% increase year over year, while EPS was about €1.58 per share, which is a 15% increase from 2024. SAP Cloud revenue increased 19% to €5.61 billion for the quarter, continuing to demonstrate strong demand for cloud-based enterprise software solutions. It's also worth noting that software licensing revenues decreased 34% from Q4 24 to Q4 25, reflecting SAP's ongoing transition away from traditional software licensing towards subscription-based cloud services. For the full year, total revenue for fiscal year 2025 was $36.8 billion, up 8% year over year. IFRS operating profit increased 111% to €9.83 billion, which is an operating margin of 26.7%. IFRS EPS increased 135% to €6.28 per share, while non-IFRS EPS rose 36% to €6.15 per share. Cloud revenue increased 23% to €21.02 billion, with Cloud ERP Suite revenue increasing 28% to €18.12 billion, highlighting the importance of SAP's cloud transition. Additionally, total cloud backlog increased 16% to €21 billion as of the end of 2025, providing strong visibility for future revenue growth. From the conference call and earnings presentation, management highlighted several key developments. SAP continues to gain momentum in enterprise AI, with more than two-thirds of Q4 cloud deals including AI capabilities. The company also reported a total cloud backlog of around €20 billion, reflecting strong demand for SAP's RISE cloud migration program and long-term enterprise contracts. There have also been many major companies which have opted to join the WISE route, as SAP puts it, and many of these companies who have expanded or adopted SAP solutions during Q4 include Adidas, L'Oreal, H&M, Deloitte, Nokia, and Lockheed Martin. SAP is also continuing to expand partnerships with companies such as AWS and OpenAI, while its business AI platform and Joule AI Copilot are expected to play a major role in driving productivity improvements for customers. Management also expects to generate roughly 2 billion euros in cost efficiencies by 2028 through the internal use of AI across areas such as R&D, sales, and HR. Now, let's take a look at that model. SAP has a relatively strong balance sheet with about $8.2 billion in cash, and approximately 5.2 or around $4.55 billion in long-term debt and $1.6 billion in short-term debt. Long-term debt has declined slightly year over year, and short-term debt has declined significantly year over year since 2024. The company's relatively strong, or actually fairly strong liquidity position, combined with the continued share repurchases and strong free cash flow generation, provides confidence in SAP's solvency and financial flexibility going into 2026 and beyond. Revenue has grown steadily in recent years, with positive revenue growth even since 2021, and the expectation that revenue will continue to grow in 2026 and beyond as AI becomes adopted even more than it already is. The expectations for continued growth are also driven by AI-driven enterprise applications and further cloud adoption. I expect revenue growth to stay stable in the low double digits in 2026 through 2030, supported by SAP's growing cloud backlog, increasing adoption of enterprise AI, and continued migration of customers from on-premise ERP systems to SAP's cloud platform. These drivers are admittedly somewhat offset by the continued decline in traditional software licensing revenue, but that will become marginally less important as cloud revenues expand. I therefore project revenue growth of around 12% through 2030, and operating margins are expected to remain strong and constant at around 22%, which is a little bit less than they were in 2025, and so slightly conservative from 2026 to 2030. Using these assumptions and given a target PE of around 28, reflecting SAP's leadership in enterprise software and its exposure to long-term growth drivers within the realm of artificial intelligence, we can gather an intrinsic value of 223 euros and 9 euro cents per share compared to a market price of 196 euros and 33 euro cents per share, which is about a 13.6% upside. As a result, I would call SAP a moderate to strong buy. Thank you so much for listening.